the problem a lot of hedge funds and private equity firms are facing. They bought a company that they thought they were really going to go and flip. Now it's, of course, struggling to make ends meet, and they've got to run it, so they're getting into the operations. Our next guest is a guy who helps financial investors become operational wizards, if you will. Darin Facer, co-leader of the business and consumer services practice at AlixPartners. You're laughing. It's because they didn't expect to be doing this, did they?
No, they did not. They did not.
So what do you have to do? I mean, how many of your clients are coming to you and say, all right, I've got this operation. I thought I was going to flip it. Now I've got to run it. A lot of your clients?
A lot of the clients. You know, we work both with larger corporations and with private equity firms, and a lot of the private equity firms find themselves in the awkward position of being more of an activist investor these days. Give
us an example. You don't have to be specific, but is it what type? Is it a retail kind of company, or what kind of companies are we talking about?
You know, it's all companies. I'm more familiar with the business and consumer services sector.
Right.
But when revenue started to decline across the board, the private equity companies knew that they needed to start taking costs out of the company in order to protect a little bit of margin. And so, you know, a couple of years ago, we used to be called in by a private equity company to make some radical changes in their cost structure. But that has changed to today. They're asking us for round two, the more difficult or more detailed cost reduction maneuvers.
Right.
And also to help on the revenue side.
You know, Darin, it sounds like they're becoming more like venture capitalists. You know, venture capitalists, they invest in a firm and they'll often find maybe, you know, a finance guy or a technical guy to kind of help, you know, get that company up and running. Is it kind of somewhat similar?
Yeah, absolutely. You know, several years ago, it was not uncommon for a private equity company to have a retired CEO or an academic on the board kind of as their operational advisor. Now what we're seeing more frequently than not is their own smaller internal operations team.
It's interesting. So let me ask you, because they're now getting more operationally involved, has their time horizons kind of changed in terms of how long they hold on to this investment because of this?
Yeah, definitely. You know, what we're finding now is, you know, when we were originally called in to help with some cost structure, there was a lot of optimism that revenue was coming back. So 2009 was very much a cost reduction. Now the last few clients I've had in the last few months has been much more around the revenue side, and then getting that additional cost structure out in case the revenue doesn't pan out.
Interesting. And then what about, you know, financing hasn't been panning out either. So what do they do in terms of if they need financing to grow?
Yeah, absolutely. Well, most companies are finding that they need to look internally for sources of cash and for profitability.
Internally meaning what?
Into the portfolio companies themselves.
Okay.
And in the lack of that financing, they're doing everything from as extreme as divestitures to try to free up immediate cash to rationalizing their footprint, re-looking at their inventory. Do we have the right products? Do we need to exit some unprofitable customers?
Right.
So not a stone unturned.
Darin, let me ask you, you mentioned that you've got kind of a variety of clients. Where are we in the cycle? You mentioned the cost cuttings. I mean, they still could do more cost cutting potentially?
Yeah, absolutely. I think a lot of our customers have now reached back out to us. They've taken the easier costs out, so to speak, and now they're coming back with the more difficult questions, the ones that are really changing the structure of their cost basis. A lot of the customers I've talked to now really want to try to use their cost structure as a competitive advantage so that they can go to market knowing that if growth is going to be flat, the best way to get revenue is to steal it from competitors. And so using that cost structure as a competitive advantage is something very appealing to clients today.
Where are they in the cycle? I mean, do they feel like the worst is over?
You know, it depends. Looking at the spectrum of business and consumer services, you've got some leading indicators like the temporary staffing agency. They were hit initially quite hard. They led into the recession. Now several of the companies report a little bit stronger than expected earnings and more of an upswing in revenue. Some of the other areas are a little bit farther down the path. If we're fortunate enough to see revenue growth in areas that are directly tied to the economy, like advertising and printing, I think those will be some of the first out of the recession.
Let me ask you, because again, going back to you, that you work with a variety of clients, which industries kind of are in the best shape at this point? Which are in the worst when you look at kind of the distressed investing environment?
Well, I tell you, some of the ones that are in my scope, I think construction and engineering is still kind of an issue. A lot of the print media is still quite distressed. I mean, the whole game there is revenue, and advertising revenue just isn't there. I'd say those are probably two of the more distressed.
Not getting better, though?
You know what? My last client was in that space, in the media space, and they did notice a bit of an uptick in revenue. But again, those industries are tied more to the overall health of the economy. I think that's a positive sign, but it's still very, very early.
All right, so those are having a tough time. What industries do you think are in the best position at this point?
Boy.
Well, I know, and you have a certain venue that you're looking at.
Yeah.
I mean, is there anybody that you can think that, in terms of talking at this event?
Absolutely. I would say, again, within the services sector, some of those temp staffing companies are seeing a bit of an uptick. I think that as companies now are optimistic about revenue, the first thing to layer on is temp labor while they make sure that this just isn't a blip on the revenue screen. And so it's kind of a way to test an increased employee base.
With companies still kind of dealing with so many headwinds at this point, let me ask you, are any of them kind of looking to expand?
Absolutely. Again, the same exit strategies are there. They're just less frequent. What I'm seeing a lot more of is strategic acquisitions. So say, for example, a company that's got a large chunk of the market in a facility services business is looking to make a play where they rapidly grab market share. So it's a great time, a lot of activity in this space.
All right, so some strategic plays,
absolutely,
if you will. All right, we're going to leave there. Darin, thank you so much.
Thank you. It's been a pleasure.
It's great. Darin Facer over at AlixPartners.